looks like I might very quickly have an entry on Bitcoin. I want to see how this candle does because I'm not entirely sold on a reversal for Bitcoin back to the upside. Yesterday I got stopped out with Ethereum, so I am down a little bit on this challenge. But I did want to make sure to let that be known. Make sure to let that be known. Excuse me. But I will also let you guys know that the Ethereum trade, if I would have gone mechanical and just did a 2-to-1 risk to reward and simply just set it in a mechanical sense, it would have paid off. Would have made $100 on a $50 risk and would have been good to go. I tried to hit the next level of liquidity, and price reversed on me quicker than I anticipated. So, say Levi, I should have probably taken some profits out. Once it hit 2-to-1, I probably should at least cash half of that position, but we'll say that for the next one. So with this trading challenge, and I really went over exactly what my plan is or what my trading method is here. And as of right now, I am in a position to enter this trade based on my model for entry, but I'm not sure if I want to right now or not. So as Bitcoin had been coming down low, you had a high, a low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Once this broke and made fair value gaps on the way up, I was waiting for a retrace back to this fair value gap, which we just hit. We literally just hit this on the 5-minute chart. But because it took so long and was such a rounded position, this reminds me of a very bearish pattern to play out. So I'm not sure I want to take this just yet. I want to see if there's a reaction off, or if it just kind of sits here for a little bit. Ideally, by this point, by this type of a rounded position, I'm actually looking to see if liquidity gets taken out from the lows created yesterday around 10:10. So that was the low of the day. I want to see if we sweep that low and then come up. But as of right now, I could enter here. I could enter a small position here, but I'm not, because I'm not entirely sold on this actually being what I look for on the model. It technically fits it, but I'm not liking it right now. It took way too long to get back down, and if it closes under this fair value gap, then it's gone. And then I will show you the other model that I would use that I actually have become more confident in. So let's watch this. We're coming up on open as well, and then again, just like yesterday, when the market opens, there's a lot more volatility. There's a lot more, the spreads shift a little bit. You start to get these big swings in spreads from 6,800 points to 8,500 points, and then back down. So when you enter position, you could enter quite differently than what you believe you're going to enter. So here's the selling position, here's the buying position. So it is almost a full $100 difference right now, which is kind of crazy if you're doing scalping or day trading. 100 point differences, or it's about 70 point difference, but it's still enough to be concerning. So we're going to wait this out. We're going to wait for either this candle closes above the fair value gap. I'll enter here with a stop loss just under this blue line. If the candle closes inside of the fair value gap or below, we're going to wait here. So this with the fair value gap, this entry model is called the 2022 model. It's an ICT concept. It's pretty easy to follow, but you really would rather have you want to have a bias going into this. They say, people will tell you you can trade without bias, and really, you shouldn't be trading at all without a bias. You should have a daily bias, or at least a higher time frame bias when you're making your trades, so that you have an expectation of which way the market can run. Like this, if the market has been going down and you're not hitting a point of interest, and the reason why I'm bullish here, the market has been going down, but the reason I'm bullish is because it's hit a higher time frame point of interest with these wicks down. So that point of interest now, I'm expecting a reaction in the market. I'm expecting price to go up. I'm expecting a bullish reaction. And again, yesterday when we were trading, I said I don't like trading Mondays because Monday tends to be a false move, and Tuesdays will usually show the bottom of that move. So like Monday comes down, Tuesday will bottom, and then start to reversal up. Wednesday, Thursday, Friday. If it's a bullish week, it'll be typically Monday, Tuesday. You open, you make your low, then you make your high, and then you close somewhere, in that range. But typically, if it's a bullish week, if you're expecting a bullish week, expect Monday and sometimes even Monday into Tuesday to be bearish, and that's where you get your buys, you get your entries in a point of discount. So we did get a reaction off of, we're getting a nice reaction off of this fair value gap. But still, I just wasn't confident in taking it, and no, sometimes don't let yourself get caught up in feeling like either you didn't pull the trigger on a trade. There may be a reason why you didn't. There may be a reason why you felt that way. If you want to be totally mechanical, then you have to be totally mechanical. You have to just, hey, conditions A, B, and C were met. I'm entering the trade, and that's it. That's something you have to, you have to realize on your own how you want to be. Do you want to be mechanical, or do you want to be intuitive? And there's benefits and there's drawbacks to both, but don't try to mix it too often. You can tend to have problems doing that. This is still just fighting here. It's got a long upper wick. I still don't trust this. Even this closes here above the fair value gap, I'm still not trusting it. It's just everything is kind of triggering my spidey senses to say to wait to see if this sweeps this low. I think that's what I'm going to wait for. Either I'm going to sweep this low, or I'm going to be out for another setup. Everything else is looking. Let's see, what's XRP looking like? XRP. See, on XRP, I'm looking for a sweep of this liquidity here, this relatively equal lows, or this low here, one or the other. Either one of these could sweep and then create a run on liquidity. Ethereum, we're waiting to see, again, a run on this low, get a run on this low, and see if we get a reaction off of it. But as of right now, these are all, again, correlated pairs. So typically, whatever Bitcoin does or whatever Ethereum does, most other alts are going to do. And if Bitcoin does it, the whole market's probably going to do it. But in a much larger sense, if Bitcoin goes up 3% today, alts will be up 8 to 10%, most of them. And if Bitcoin goes down 2 or 3%, then it'd be another bloodbath. It'd be another 8 to 10% down for alts. It's just the way of the world in crypto. Everything runs exponentially off of Bitcoin because there's just not enough liquidity in them, honestly. If they were more liquid markets, they would hold, more like Forex or, your largest stocks, 2% moves on a day are great on a Forex or something. It's a massive move up or down. So we're entering into the second fair value gap. You can kind of see it here. This is one that was closed through in order to make a balanced price. See, that holds as an inverse. That could just hold as an inverse fair value gap now. I think I closed through. And we're on the 5-minute chart, and if I have to adjust times, we can adjust times out to 15 minutes or even an hour. I likely wouldn't trade 5 minutes on any other alts just because of, or any altcoins because of the spreads. But on Bitcoin, I can watch this on 5 minutes, and it's not too big of a deal. I would probably trade off the 15 though. But I'm just looking at these smaller time frame gaps to see if these gaps close. Now we're about 12 minutes away from market open, so interested to see how this reacts with market open. I just have a feeling we're gonna see one more push to the downside, but I could be entirely wrong. Sorry I don't have more energy tonight or today. Last night was brutal. I don't know if you guys are aware, but I work evening shifts in a steel processing plant, and it was hot. I'm in the mid-Atlantic, so it's getting to the point where it's going to be like super hot and humid. There's no air conditioning. It's a steel hot box, and a lot of work last night. Just stayed really, really busy, so I'm pretty wiped this morning, but you got to get up and grind. You got to set your trading times. You got to stick to them. You got to hit them. There's no excuse why, I got off work at midnight last night, so I was able to get enough sleep to get out here and be back on by 9 a.m. So no excuse. Do it even when it hurts, even when you're tired, when you don't want to. Do it. Even if you don't feel like you have the mental energy to make a trade, continue to watch the charts, continue to check your patterns, check and see your conditions, and at least watch, at least be there and see what's going on, even if you don't feel like you have it mentally to trade. Get yourself up, get up at the same time, and get yourself at least on the charts. I don't believe in watching charts for 4, 5, 6 hours at a time, but I'm going to hit my windows. I'm going to make sure I'm looking from 8:30 to 10:30. Those are typically the times I like to make sure that I'm at least watching, and then that's it. 4 to 5 days a week, 2 hours a day, and if you can keep that consistent, you will make money. You will, if you can stay consistent. And the biggest thing about staying consistent is the little things, not even to do with trading. Consistently waking up, consistently getting on the charts at the same time, consistently getting yourself ready to go. Like the first thing I do when I wake up is I go and take my dog for a walk, and I get some sun, and I get some vitamin D or whatever, and it just kind of typically gets me at least a little bit of focus before I go start looking at a chart. Get some touch grass, get some sunlight before you come in and start looking at charts. That's just just my opinion, but it seems to help a lot. All right, so we are seeing a rejection off the second fair value gap and push down back to the first. like I said, I'm not confident in either of these right now because of the way that this move played out so long. It just seems like, I think they call it a horseshoe pattern. You see a low, then you have this kind of like a bear flag, like a really U-shaped. Then you typically come back down and break this low. So it's typically a bearish pattern. That's why I didn't like it. If I'm looking at the 2022 model, I want to see like a V shape. I want to see down, up, right back down, fill a gap, and then shoot up. Like this one, if I was trading, there wasn't a fair value gap here, but if there was and it hit here, you see, you didn't have to wait 12 hours or however long this was to get this to fill. I mean, it was V down, you made your new low, you broke the high. Well, let's pretend this broke the high with a displacement. So we'll pretend for this it came up, broke the high, hit a fair value gap, and then shot straight up. Like that would be your move that you want to catch, and you want to catch that move. And then it's likely, you stop either here. That would be your price out. That's your next liquidity. Or if you're really getting, maybe up here, but again, you're getting 80% of that move just by getting from a point of liquidity to another point of liquidity. And here we go, we're back down into the deepest fair value gap, and this should probably just get blasted through. Well, we should sweep the low. Then I'll show you what I look for if the low were to sweep. If we were to sweep this low and it happens and it doesn't happen on camera and we come down, if there's a fair value gap anywhere in here, we're going to look at it. So I'm going to take these off, and we're going to look for what we're going to call an inverse fair value gap. So a gap that we expect to close out the opposite way. So it could be this here. So this was that strong move to the downside, right? This long body candle. Now this gap did close and the price should be coming back down. If the price sweeps this low and comes back up and closes above this, and this will become a support area, this will become a inverse fair value gap, and you can enter off the close above this. Ideally there would be another one down here somewhere where we get a little bit of a better entry. But if that is the case and we get an entry on the inverse fair value gap, we could look at liquidity here to get out, liquidity here to get out, or even up to here. But you will definitely want to start scaling out. You're not looking for, you're not going to look for a week's worth of moves where you're like, I want to scale out here at 70,000. No, that probably won't happen in the trading week. That'll probably be over the weekend or something, if it moves up, if it does this move at all. So as of right now, that's kind of what I'm looking for. This fair value gap has already been violated. This one is being tested now, has held, but also in that holding has created a bearish one that has also held. So we'll have to see which one of these actually works out and wins this battle. Like I said, I am aiming for down here. I'm aiming for a target of a sweep to come down, sweep this low, and then pick price back up, make a V shape, make a strong move back up to the outside. It should be a pretty violent reaction off of sweeping that low if it's going to work out. If it doesn't have a reaction off of sweeping that low, then it's probably just going to be another leg down. And my bias would be off at that point, or it's just going deeper into the larger fair value gap. So I'll show you guys that on the daily. This is our daily fair value gap, and I will make this one a different color. I'll make that orange. That's our golden zone. That's our daily fair value gap. So this was our point of interest to come back down, test this point of interest. Now it could go all the way down to 62.7. It could fill this entire gap. So just because we touched it yesterday doesn't mean that it's automatically going to start closing up. We want to see a reaction off of it, but it might need to fill deeper. So that's why I'm bullish on the overall because we've touched the fair value gap. It's a point of interest. We should start to see a reaction off of it, though we might need to go a little bit deeper into it. So again, just like yesterday, I'll make a post if I do have a trade that is off the, that is not on camera. And for right now, because I'm recording to myself, I'm probably going to cut this here, just so you guys know what I'm looking for. You know, if you watch this, you know what the strategy is. The 2022 entry model, I don't expect to play out here. I expect to sweep this low, and I'll be looking for an inverse fair value gap to be violated, and then take a long on that position if we get a sweep of this low and a move to the upside. If it sweeps or runs this liquidity and runs this down, then we're looking that we could go down another 2.5% and still be in this fair value gap and still have the same bullish point of interest, but just filling it entirely. So there's a lot going on. The price isn't really doing a whole lot right now. I'll wait and see this 9:30 candle is getting ready to open, see what happens at market open, and then after that 5-minute candle I'll probably close it, as long as there's not something immediate. So here, if this candle were to close down here at the bottom of its lowest wick, that would then violate this fair value gap as well. So I'm looking for this one to violate, and that would be to close below it. There's a lot of alts that I really like right now just to buy in general. So outside of the trading challenge and outside of trading on leverage, AVAX, I think right now at $25 is a hell of a price to start loading up a bag of AVAX. ADA is at a hell of a price to start loading up. I think it's at like 37, 38 cents. At least it was last time I checked. There's a handful of really good ones that are really low. I made a video about Telos, and Telos at 21, 22 cents is an amazing buy, I think, as well. So there's a handful of really good ones. And, AVAX and ADA are pretty much blue chippers at this point. They're top 20 tokens. And then Telos is a sleeper, somewhere in the 400 range with about an $88 million market cap that could also really just blow up. But, really want to wait for 9:30 market open. I want to see what happens with volatility, but I think this fair value gap gets violated. I think we push back into the daily fair value gap, and I'm hoping for a reaction off the daily fair value gap to have some bullish momentum, but we'll see what happens. I mean, this fair value gap held again, so this could be, we'll see how the market open plays out. It looks like the Dow Jones was down pre-market. NASDAQ was slightly up, but pretty much flat, and the S&P was pretty much flat. So if this were to break down, retest the daily fair value gap, and have a reaction off, I'd be looking for a fair value gap that happened on the way down to get violated back up, make an inverse. So the red one here, and this, it looks like it's going to be potentially violated here. Let's see what happens. Alright, so obviously we're in the 9:30 candle now. We're getting some movement down. The spread is still sitting around 6,800, so the spread hasn't shifted too much, though there's some occasional peaks. I think it spiked up to 9K just for a moment. some price action coming down. Take a look and see if, let's see what the indexes are doing. Dow Jones is down 16 points, pretty much flat. S&P 500 is up 3 points, pretty much flat, and the Nasdaq's up 26 points, 25 points, pretty much flat. Everything's within like 0.1%. Crypto, pretty much everything is taking a pounding. Another Go token that's been taking a pounding recently that I made a lot of money off already on the first leg. It's Phantom FTM. I bought it 17 cents, sold it like $1, and now it's back down to 48 cents. So another great potential to get into Phantom right now. And SWE is down to 78 cents. That's crazy. It was up to over $2 recently. Yeah, all these alts are taking a pounding. And then the only thing that really destroys this is if markets go completely risk off and we go into another bear market, or we are already in another bear market, and all of our analysis, myself and pretty much everyone else, that's calling this just the first retrace, and we're wrong because we have already re-entered a bear market for alts. Most are already down 70-80%. So it's tough to say, but I'm going to say as long as Bitcoin stays above 50K, we're going to be pretty solid. You'll get some good entries on altcoins, but as long as Bitcoin holds the fair value gap down around 52K, we're still bullish, and I'm not too concerned about anything else. Alts will rally when they rally, and they will, they'll do 3x what Bitcoin does. You just get a lower entry on them. That's all it really is. But again, this fair value gap is being violated because of how long it took to get back to it, this horseshoe style pattern. I didn't expect it to last. That's why I didn't take the 2022 entry model here when it hit this fair value gap. I don't do strictly mechanical. I do intuitive as well with my trading, so I just didn't like this fair value gap. I didn't like the 22 model to enter. What I'm looking for now is to sweep this low put in last night, sweep this low and see if we get a reaction off of that. If we get a reaction off, we'll go bullish for the day. If we don't get a reaction, then I probably don't trade today, because I definitely don't want to go bearish. I don't want to go into a short position when on the higher time frames, on the daily, we have already wicked into the big daily fair value gap, and it could react off of that from any point. We could get a deeper push into the fair value gap down to about 63, all the way down to 62.6. We could see a push all the way that low, but when I'm in the point of interest for a bullish move, so that's a point of interest for me to see a retrace, and then to look for another leg up to potentially push to a new all-time high. I'm not going to short anywhere near that point of interest. If I was going to short, I would have shorted this double top down to this point of interest, and that's where I would close my shorts and start looking for longs. So with that being said, looking all the way tightened up on the 5-minute window. All right, so we had a close below this fair value gap. So this fair value gap did in fact get violated. We're going to close this out, and now if we're going to enter a long today, or this morning session, if we enter a long, it's going to be after a test of this sell side liquidity. So we have a bearish fair value gap here that has held so far. This could be our trigger. So if we come down, test this liquidity, push up, and close above this fair value gap, this could be an entry point. Like I said, I would like to get one a little bit lower so that there's a little bit of an opportunity to get a better entry, but we'll see how it goes. I feel like I've talked in circles enough. No one really watching, no real questions or anything. So with that, I'm going to go ahead and close this here. I will put a post out if I if I do end up entering a trade here, but I'm pretty much watching only Bitcoin right now because this is going to be the move that pushes liquidity or doesn't. Um, so I hope you enjoyed. Hope you watched for a little bit. As always, till next time. Peace.